back on this trade issue that has also roiled the markets. Free marketeers, though they say they are, of course, they were beneficiaries of a bailout and the meltdown that happened after that, and the Federal Reserve keeping interest rates at 0%. So they sometimes can pick and choose who they want to help here. But having said that, we should report that Boeing is taking it on the chin right now. The fear seems to be that Boeing, as a key Dow component, could be targeted by the Chinese for retribution because of these activities. China has already vowed to take all necessary measures. It has denied forcing companies that do business there to hand over their technology. And it says that it does play fair. Now, Kevin Brady, the House Ways and Means chief, has said that a trade war risk, whatever you think about it, wiping out whatever tax cut gains we have, hence the concern that's building on Wall Street here that what the tax cut giveth, all of these other things could be taken. Market Watchers Larry Glazer, Lizanne Sonders, and Dave Maney. Lizanne, are you worried about this? Is this building into something?
Well, yeah, it's been one of our primary macro worries is that, you know, in theory, you can combat what clearly are some unfair practices in China by going down the tariffs route. The problem is that what does that do to the supply chain? What does it do to retaliation? Does it turn into a trade war? And there's really no history anywhere of tariffs resurrecting an industry that was in some sort of secular decline. And I just think the potential negative ripple effects of this may be more significant than what ultimately we might get out of this. And I do think that it is a factor in market volatility, not just on a day like today, but really this year so far.
You always worry about the tit-for-tat nature and what follows. And, Larry, of course, then it says, all right, we start, as we did a few weeks back when the president was looking at South Korean washers and, solar panels provided by China. Now it's extended to a variety of aluminum and steel-related products. The Chinese could come in and start targeting a lot of agricultural goods. You know the drill on this. Are you worried?
You know, Neil, it'd be so easy to come here and say, hey, tariffs are not pro-growth, tariffs are not pro-business, tariffs are potentially inflationary, they raise the cost of goods in the United States, they potentially cause the Fed to act. All of those are true, but they miss the whole point. Look, the president talks about reciprocity. We haven't had a trade policy. The markets are selling off on the basis of fear of retaliation. That's why the markets are down. The reality is fear has been driving our trade policy for the last few decades, especially as it relates to China. So this conversation needs to be had. We need to draw a line in the sand. Wall Street doesn't like it. They don't like the lack of free market. They don't like the lack of pro-business. You get a president, he uses Wall Street as a scorecard every day. He's very mindful of the market reaction. That's one thing I can assure you.
He must be mindful as well, then, having said that, Dave Maney, as soon as we got news that John Dowd was out as his lead attorney in this Mueller probe, the markets were already down about 300 points, fell another 150. And now we're in between, now down about 412 points. I don't want to sign it all to that, just the instant reaction. Now we're hearing that as the president was stepping out of that room, a reporter shouted to him, would he testify before special counsel Robert Mueller? The president responding, yes, I would like to. I would like to. He was saying that off camera. Weigh those two dramas, the trade drama and the Mueller drama, and what's weighing on markets more?
Oh, you know, I think today.
Dave first. Go ahead.
On the trade side, I think the president is best understood as a blunt instrument. I think that's where he's most effective, and trade negotiations are full of subtleties, and I don't think he intends to get into them. I think that when you've watched this since the tariff thing, where he just kind of dropped the single tactic sort of thing, I think what you're seeing is, and I think now he knows what he's doing. I think his intent is to wade in a reset the dialogue in the way it's going, and I don't think he has some fine-tooth comb of policy ideas that he's gonna spread. And I think my watching the Chinese, I think it's kind of working. And so if you have people that are trying to decide, well, what does this tariff on washing machines mean, and what's this one going to mean? I don't think that's the way to read it. So right. There could be an overreaction on that front, and on the council front.
Could you hold on to that thought? I'm sorry. Hold on to that thought.
Sure.
We are getting John Dowd responding and issuing a statement right now saying that I resigned Thursday morning and President Trump graciously accepted. The president has a terrific case and has proved to the special counsel Robert Mueller and his team in Spain. The statement I made last week about the special counsel ending is no different than what I have told Mueller and his investigations on multiple occasions. I'm proud of the president's transparency, and how anyone could accuse him of obstruction after the president's extraordinary cooperation is beyond me. I love him, and I wish him well. Now, we should stress that Dowd was among those who did not want the president to sit down with Bob Mueller. Apparently, other lawyers are contemplating a middle ground where either it provides written answers or some very, very tightly constricted areas where he will answer questions from Bob Mueller. John Dowd thought that was a mistake. In fact, when he went sort of rogue, as some interpreted over the weekend, to say the investigation itself should shut down and be finished and be done, that was a bridge too far. Liz Ann Sonders, I guess, without getting into the weeds here, it's just more uncertainty, is it not, for the markets, and that can never be good.
Well, it really depends. The market doesn't like uncertainty. That's kind of an old adage. However, if you think about it from an investor sentiment standpoint, one of the reasons why over the long history of being able to track partisan conflict, in fact, the Philadelphia Federal Reserve actually has an index. Interestingly, when partisan conflict has been highest historically, the stock market has had its best performance. So to the extent that it helps to kind of keep the reins in on investor sentiment getting too frothy, which frankly was, I think, one of the precipitating factors to the correction in February, was the kind of optimism, excessive optimism that kicked in, sort of the froth. That may not necessarily be a bad thing. That's not to say I think any of this uncertainty is a good thing, but it is probably having the effect of keeping a lid on that froth that we saw in January coming back.
You know, Larry, one thing I could say, and I'm no market technician here, but I'm telling you, every time a development happens that looks like it might be bad for this president or his presidency, the immediate reaction of the markets is to sell it. They don't like it. Conversely, when they see a development that they, deign to be not dangerous, for example, when Mueller had come out by targeting these Russian entities and no Americans were complicit in that first wave. When we got the report that he was going to do something, that the market sold off. When it found out that there were Russian-only entities, it came back. The only point in my droning on about this is that it seems to me the market is tick for tick following the prospects and where this administration is going. The stronger it looks, they like it. The less strong it looks, they don't.
Look, Neil, at the end of the day, what's been driving CEOs' optimism, small business optimism, Main Street optimism, all of which has an underlying positive tilt here, has been this not only tax cut and pro-growth agenda, but also the lack of regulatory burden. And I think that's the piece that gets missed in this conversation. We talk about turmoil at the White House. It doesn't change Main Street. People are still renovating houses. They're still building factories. They're still trying to find skilled labor. So all those things go on. They've become immune to any of the turmoil that they perceive is not economically related. It's not economically driven. So you've got a pro-growth agenda that is very much in place. A lot of turmoil, a lot of distractions. And Main Street and Wall Street will ultimately screen that out and focus on corporate earnings. We're playing chicken with China. That's what we're doing today, right? And we'll get through that. We'll get past it. At the end of the day, I think there's confidence. That's a negotiation posture that hasn't been in place for the past few decades. We're going to get comfortable with that. Then the markets will realize it is very limited economic impact, and all will be okay.
All right, guys.